Hello students, today we will be starting a new subject in BCom, MCom, CA and CMA and CS also, all these courses. So that income tax subject, almost all commerce and professional courses are there. So today we will be discussing the basics of income tax. See, unless and until we do not know the basics of income tax, it will be very difficult to go for the subsequent stages. So, first this income tax discussion in our class 1 level discussion, you have to understand the various terminologies of income tax. It starts with the assessment year. How? You see that income tax, what does it mean? First you understand. If you earn income, you have to pay tax. That is a layman concept is there. Because government is run by all these taxes only. Then question comes, why this income tax question comes? Means you are in the society, you are earning something, you are to pay some portions of your earning to the government so that government can run the show. If you understand for a government as a whole, what is their income? Their income is nothing but from the taxes only. That is individual income tax, corporate income tax, and other business enterprises income tax, income from salary holders income from house property, all these details will come. So that means a government has no other source of income except the taxes. Some other cases government has some companies, there they might be getting some amount of return for that is this thing. Because major source of income for the government, either it is a state government or a central government, either it is in the form of income tax or sales tax, whatever the way may be, they will be getting for that. So first we will be understanding these things. What are the terminologies we understand so that we can go for discussions further. So we understand that what is income, and on that tax, one portion, that is the thing on your income. So how to assess the tax, or other way around, when it is to be assessed. So that is the one year you have to understand. What is the year? That is the assessment year. Assessment year means which year your income is to be assessed. But in technical terms, assessment year may be defined as a year in which income of the previous year is assessed. Actually, instead of telling what is assessment year, it is referring to some other year. So that means assessment year is the tax year for the income of the some other year. So that is the thing. Assessment year may be defined as a year in which income of the previous year. That means in order to understand the assessment year, we have to know the previous year. So that means assessment year is for a particular year in which year the income of the previous year we have to pay tax or calculate the tax or assessed. Now, what is previous year? Income of the previous year is taxed in the immediately following the assessment year. That means income of the previous year is taxed immediately following the assessment year. That means assessment year and previous year are correlated. एक के बिना दूसरा अधूरा है. So first of all we have to know what is the previous year. Previous year means that is the income year, that is your earning year, and assessment year is the next year of that earning year, that technically we are calling here previous year. So again we are repeating, previous year is nothing but the income earned in which year, that is the previous year, and assessment year is the next year of that previous year, so that this year your previous year income is assessed. Very simple, we will conclude. So previous year, if it is income year, say your 2022-23 is the previous year, definitely assessment year will be the next year. So that means if 2022-23 is the income year, that year income will be assessed in the year 2022-23-24. That means next year, 1 year next year of the previous year is the assessment year. You get my point? Next year of the previous year is the assessment year. Now here some sections also you have to keep in mind. You see, when you tax or any law matter you are discussing, initial stage your become level you may not be so important, but subsequently when you go for some your postgraduate level or any professional courses, every area of any tax or law, it is guided by some section. Here that is the assessment year is section 2(9). You have to remember, slowly you have to try to remember the section. Previous year is the section 3 of the Income Tax Act. Now it's clear which is assessment year, which is previous year. These two things clear. 1 year is the income earned year, 1 year is the assessed. Government tax assessment they will make it. Suppose if you take an example, this year is the previous year, that means 2000, which year the now going on? 2023-24. This is the assessment year for the previous year of 2022-23. So that is the previous year. So you understand that? Now you come to the term is assessee. Here also this is section, you try to remember, section income tax section 2 subsection 7, 2(7). That is the assessee. Who is assessee? Assessee means who pays the tax. He may be an individual, he may be a company, or it may be a firm, a society, a group of persons, a local body, so many. Everybody will come under assessee. Now, who is assessee? Assessee means a person by whom income tax or any other sum of money is payable under the Act. That means assessee means an individual, a person to whom or by whom income tax or any other sum of money is payable under the Act. To whom? To government. That means under the Act, any sum of money or any tax to be payable, to be paid or payable by a person, he is an assessee. You are getting my point? So that is the thing, who is assessee. Then here very important term under that Income Tax Act, a person, individual. But here person matlab this year, it is an extended persons also. First of all, individual we know that person, but Income Tax Act wise person means individual is there. At the same time, a Hindu undivided family, you know that HUF, this will be the common term for the Hindu undivided family. A company also will be a person as per Income Tax Act. A firm, a partnership firm or proprietorship firm, that is also a person. An association of persons, that means your any association formed, your society associations, like that, any association formed, that is also a person. Society or body of individuals, that is also a person. A local authority or local body, that is also an association. every artificial juridical persons, any artificial persons also will be treated as a individual under the Income Tax Act. So these are the basics of your income tax starting. Now you understand that what is assessment year, what is previous year, what is SSC. Assessment year is the tax assessed year, previous year is the income year in which income is earned, SSC is the person who is liable to pay tax or any other sum of money. This is simple. And this is the individual. Person means individual. He may be individual or an Hindu individual family or a company or a firm or an association person or a society or body corporate, a local authority or every artificial juridical person. All those different forms, everybody will come under the terminology of person in respect of Income Tax Act for his assessment. So now we will be going some other points also before going to chapter wise income tax calculations and particular purpose wise. So we understand that our assessment year and previous year, and next we have understood that which is the SSC. Next we will be going for these things, residential status. This is very important for your income tax concept. You see that whether here any particular year a person is resident of India or not, that you have to understand here. And what type of resident is there, that also you have to understand. That is called the residential status. Whether you are a resident or not, whether you are resident but not ordinary resident, these are the different types of the point is that. How the residential status will come, what it explains. SSCs are either number A, resident in India, or B, non-resident in India. You see, very clear. See, for SSC purpose, he may be a resident in India or a non-resident of India. That means a non-resident of India also may be taxed under the Income Tax Act. So there are two categories, resident in India, non-resident in India. This is one part. However, this is the extension of that. Resident individuals and Hindu undivided family HUF short have to be a resident and ordinary resident. Or be resident but not ordinary resident. You see that earlier we have discussed that SSC may be either resident or non-resident. You see that. He may be a resident or non-resident. The person concept we are talking. But, however, resident individuals, the individual residents and Hindu individuals, these two categories, that company, firm and local body, they have excluded that. Have to be a resident and ordinary resident. You see that. he should be resident as well as ordinary resident, or he should be resident but not ordinary resident. That means resident is common. One place it is ordinarily resident, another place is not ordinary resident. These conditions applicable for whom? For individual and Hindu undivided families. So this is the point for that. Now we will be going for this way. Little further detail we will be doing for this thing. Now residential status of an individual. This is under section 6. You remember that. Residential status of an individual. You try to remember the sections also, because any tax and law, everything is guided by certain sections. Without sections, it has little implications only. So these things. So residential status of an individual under section, what it is being told here? An individual may be resident and ordinarily resident, be resident but not ordinary resident, or C non-resident. You see that here three things we are telling that thing. जो residential status under 6, they are categorized 3 points. An individual, resident and ordinarily resident, one category, resident but not ordinary resident, one category, and non-resident, totally non-resident. Here resident and ordinary resident, but resident not ordinary resident and non-resident. These 3 categories are there. It has been divided into. Now further declarations they are giving for that way. You have to remember this status, because accordingly tax assessments will be done. Now we will be discussing who are residents and ordinary resident. Here section 6A, one section, and 6.6a. You remember that. This resident and ordinary resident, it will cover under section 6.1 and 6.6a under the Income Tax Act. What does it mean? What does it explains that? To find out whether an individual is resident and ordinarily resident. In India, one has to proceed as follows. You see that to find out whether an individual is resident and ordinarily resident in India, one has to proceed. You see that first condition, resident and non-resident, resident but non-resident, and non-resident. First point is the resident and non-resident. You are to satisfy certain conditions. They are telling that one has to proceed as follows. What that system? Step 1. First find out whether such individual is resident in India. Step 1. And step 2, if such individual is resident in India, then find out whether he is ordinarily resident in India. You see, here things are very clear. To find out whether an individual resident or ordinary resident in India, one has to proceed as under. Step 1, what he is telling that? First find out whether such individual is resident in India. And step 2, if such individual is resident in India, then find out whether he is ordinarily resident in India. That means you will have to satisfy both the condition, resident as well as the ordinary resident in India. So in such circumstances, what are the conditions laid down under the Income Tax Act? That you are to remember very carefully, because you may be asked to find the residential status of an individual. Now we have to understand basic conditions to test as to when an individual is resident in India. You understand that? Basic condition to test as when an individual is resident in India. He will be resident in India under certain circumstances. What are those things? Under section, you see that you have to keep the sections in mind in Income Tax Act. Under section 6(1), an individual is said to be resident in India in any previous year. Now you understand previous year, which are those? In any previous year, if he satisfies at least, you see, at least term is very important. At least one of the following basic conditions. Which are those conditions? Under A, he is in India in the previous year. for a period of 182 days or more. You see that under section 6(1), an individual is said to be resident in India in any of the previous year if he satisfied at least one of the following conditions. That means there are more than one conditions. He will have to satisfy at least one conditions. He is in India in the previous year for a period of 182 days more in any particular previous year for assessment purpose. He will be treated as a resident in India if he stays in India for 182 days or more. And another alternative is there. He is in India in the previous year for a period of 60 days or more during the previous year, and 365 days or more during the 4 years immediately preceding the previous year. You understand that? What does these things? You will have to satisfy either of the two conditions, both the conditions, okay, no problem. At least one of the two conditions. That means in the previous year he will have to stay 182 days or more. Suppose if he is not staying in India 182 days or more, alternative has been given. In the previous year he will have to stay 60 days or more and 365 days or more during the 4 years immediately preceding the years. You understand that? Suppose first condition, say previous year is 2022-23. First condition is there. Number one, this previous year he will have to stay 182 days or more. And second condition is that when that 182 days condition is not satisfied, they have relaxed in place of 180 days. That previous year he will have to stay 60 days or more. It has been giving the lesser number of days, but once previous year they are giving the 60 days, with that one condition they are making that 365 days or more during the 4 years immediately preceding the previous years. That means suppose 2022-23 is the previous year 180 days. Here this previous year 2022-23 you are staying, instead of 182 days you are staying only 60 days. Then you have to, one more condition you have to satisfy that 365 in the previous, another earlier 4 years. That means 22-23 you go back, 21-22, 20-21, 19-20 and 18-19. 21-22, 20-21, 1920 and 1890. So that means this is the conditions here. So either you have to stay 182 days more in the year previous year 2022-23, or suppose you are not staying 182 days, then you have to at least stay 60 days or more in the current previous year and 365 days during the earlier 4 years immediately preceding the previous year. So in respect of your previous year, since it is 2022-23, then earlier 4 years means 21-22, 20-21, 19-20 and 18-90. Taking together all 4 years, you have to stay at least 365 days or more. So you understand that you have to satisfy either of the two conditions in case you are to be test an individual who is resident in India. So this is the residential status. The main point for that you have to understand and remember for this calculations purpose. This part is over. Now we are going for this thing. See that part resident and non-resident. Now next part, as we have given no resident but not ordinarily resident. As you understand that we have given three different things: resident and non-resident, resident but not ordinary resident, and non-resident. So in this situation what will happen? An individual who satisfies one or more of the basic conditions laid down under section 6(1) but does not satisfy the two additional conditions laid down in section 6 subsection 6 is treated as resident but not ordinary resident. See, which are these things? Resident but not resident. An individual who satisfies one or more of the basic condition laid down under section 6(1) but does not satisfy the two additional conditions laid down in the section 6(6) is treated as this thing. That we have earlier, these two conditions we have explained. So he is resident but he is not ordinary resident. Under that category he will be treated for that. So that we have explained those two points earlier stage. And now last point is that non-resident, third point. Non-resident, very simple. An individual is a non-resident in India during the previous year if he satisfies none of the basic conditions laid down in section 6.1. So that means for non-resident status purpose, so he himself dissatisfies this section laid down in section 6.1. First step itself he could not satisfy, then only he is treated as a non-resident in India. See, basic condition, that is the, if he satisfied none of the basic conditions in under section 6.1, then he will be treated as a non-resident. Now we have discussed today what is previous year, what is assessment year, next your what is SSC, then your residential status in three part, resident and ordinary resident, resident but not ordinary resident, and non-resident. Now we will be going our technical pathway, calculation of income tax purpose, that we have to go stage by stage. You see that our cases, heads of income on which we will be calculating the income tax. Those are the heads of income, means based upon your source of income, we do have separate source of income, and every source of income, their assessment or tax liability calculation formula and terms are different. So you have to calculate different way, individual section wise calculations, and you have to take the total income and you have to go for the rates. That will be discussed one head by head. Number one, your income from salary. Number two, income from house property. Number three, profits and gains. From business and profession. Fourth one, your capital gains. And last one is the income from other sources. So basically we will be calculating the income under these 5 heads. Income from salary, those who are in the salaried employee, their calculation will be under income from salary. Those who are giving the house property on rent, their case income from house property. Then business organization, profits and gains from business profession. It may be a proprietorship organization, it may be a partnership firm, it may be a company. Whatever case may be, we will be calculating under this head. Capital gains also, which situation your capital gain will be there, what type of transfer, what type of money transaction capital gains arises, that we will be discussing here. And income from other sources means this is a miscellaneous head which will not be identified under any of the 4 heads. That should be treated as a income from other sources. Those will be discussing one by one. This is my today's class 1 lecture. Today we are concluding these things, and now we will be, please do follow my lectures. Another 3 or 4 lectures will come to complete your income tax class. Every head wise classes I will be making for. One day I will be making income from salary, one day I will be making from income from house property, like this way. With problem solution session will come, all these section wise, what way the treatment will be there, whatever the deductions will be there, that we will be talking into, we will be explaining for that. So like every day, I will be once again request you, please do subscribe to my channel so that it will be wide circulated, and so that I will be more motivated to bring more such videos for your exam purposes, be it your high secondary level or BCom MCOM level or your professional courses like CA, CMA and company secretaryship courses. So, आज के लिए we are concluding this discussion today. Have a good day.